Good morning.
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 Morning. Okay, I see only Symphony is not in this yet, so we could get started with our little review, I guess. How you all doing today? Hi. There she is. Okay, she's coming in now. Okay, what section deals with the requirement of the IBC Act, deals with the requirement for us to file the register of officers and directors?
I didn't get the question, Mr. Ossett. It was a bit like it was breaking up.
Okay, what section of the IBC Act directs us to file the officers and directors of the company with the Registrar General?
Section 44.4.
44.4. And 44.4 tells us to file it, and what's the time frame for us to file it?
12 months.
12 months. And what section tells us that?
Section 11.
Of what?
International Business Companies Amendment Act 2004.
Excellent. Now, what section deals with us having to have a registered agent in the Bahamas if we want to have an IBC?
Section 33. No,
Say it again.
Section 38.1.
38. Yeah.
38.1, yes. 38.1 tells us we must have a registered agent in the Bahamas. What about a registered office? Do we need to have one in the Bahamas? If so, what section tells us that?
Section 37. Section 37.1.
Okay, very good. Now, why should we keep corporate records? Why is it important for us to keep corporate records?
For reference in future, and also if there's a legal hearing.
Okay, what else?
To ensure limited liability protection for limited liability companies.
So how you think that helps us when we do that? If we keep the corporate records, but you think what example we'll have to show that we ensure limited liability protection?
What do you mean? What example?
Give me an example of me keeping a corporate record for the purposes of ensuring limited liability protection. When we don't have limited liability protection, what happens to the company? How would it not lose its limited liability protection? We learned about this early, eh?
There would be no documentation to prove that the company actually was instituted as a limited liability company.
Right, so what happens? How can I remove limited liability protection from the company? What would I do?
You would have to undo the corporate veil.
Right, so we pass in the corporate veil, and how would we pass
I was thinking that.
Right.
The
Okay,
facade
so-
test?
Right. So what limited, how we gonna move that? What happens when we press the corporate rail? What happened in the company?
Information was concealed.
Well, okay, and
The
what else could have?
liability of whatever the company does, an error goes right back to the shareholders.
Okay, so we have to ensure that these things, certain things are done in order for us to keep the company within its limited liability status.
Mhm.
Okay,
Mhm.
what else we doing? Keeping the corporate records.
We are sometimes we might be the registered office for that
Mhm.
company. So they could always look to us to get the documentation.
So that means we should have certain things there, right?
I would hope so.
So now you gotta tell me which section tells us what we should have.
I have to look for that. One moment.
Is that section 29-1?
What 29-1 says.
We have to have the name and address of the persons who are registered shares, who have registered shares in the company, the
Mhm.
number of each of the class and series of registered shares,
Right.
and the date of anyone that's been removed or
Okay.
ceased to be
What
share-
about section 67? What section 67, 2, 1, 2, 3 says?
The company
And-
shall keep financial statements,
Mhm.
accounts, and records of the directors considered necessary or desirable in order to reflect the financial position of the company.
Right.
A company shall keep at its registered office a copy of the memorandum of articles and all amendments thereto, a
Mhm.
register of all its directors and officers, and such other records as the minister may by order prescribed.
Mhm.
And a company shall have a common seal and an imprint thereof shall be kept at the registered office of the company.
Right. So we need to have all of these things. Eh? What else we have to have at the company's registered office? The declaration, you see that declaration in accordance with the IBC accounting records order, that the company is maintaining reliable accounting records, that the accounting records is made available to its registered agent. Do we have any fines imposed for us failing to do these things?
Yes, Rob.
What fine we have?
$10,000,
In accordance with what?
section 181 of the
Okay.
IBC Act of 2000 as
Okay.
amended.
So they could have 10,000 or 2 years imprisonment, eh?
Yes.
So you see the importance of keeping corporate records is for the shareholders to see their documents and expected for us to ensure legal and regulatory compliance, to ensure we keep limited liability for the company. We should also fully document who are the directors and shareholders and their due diligence information, and be representing the current and accurate information on the company, its corporate and financials, affairs and shareholding. So that was more or less Unit 5 in a nutshell, eh? Okay, so any questions? You all were able to look at Unit 6 as yet? Okay. So after Unit 6, we should understand the legal requirements for client verification and due diligence. We should develop an awareness of the money laundering and terrorist financing risk inherent in the vulnerabilities of products and services relating to companies, gain an appreciation of the best practices relating to client due diligence, apply best practices to client acceptance and monitoring policies and procedures, and assess and manage the client acceptance process for compliance with applicable laws and regulations. Okay, Symphony, you could help us this morning?
Sure, I can. Trustees' duties. As mentioned previously, trustees are fiduciaries, one who acts on behalf of another with regard to a particular matter.
Okay.
And as
whi-
fiduciaries,
which-
trustees are in a position of trust.
Symphony, what you reading from? I thought we were in unit 6.
Yeah,
I-
you tell me. I'm in unit 6.
Yeah, what I have wrong?
I reading from page 59.
Okay, I don't have a 59. My 59 ends on unit 5. I must be on a different book.
No, it starts at definition of money laundering, page
Okay,
60.
good. Okay,
Yeah.
I thought I had the wrong book.
The
It
book's
does? My
probably
book must be
numbered
fixed properly.
differently. Yeah, it's probably numbered differently because I realized like my unit 7 is way at the bottom of the ending page of unit 6.
Yeah, mine's too.
Yeah, so
But
the
you
book's
have money
probably,
laundering. This is definition of money laundering is where it begins.
yes, for unit
ma'am.
6.
Okay, good. Symphony, you have that?
Hey, looking now. Definition of money laundering.
Uh-huh.
It start off like how you have after completing this unit, understand the general duties of a trustee. That's the first thing you have on the paper, right?
No.
Understand the legal requirements for client verification and due diligence would be
Let
number
me
1.
go back a chapter. Hold on 1 second. Something might not be right.
They probably mix up your book.
Yeah,
Oh,
that
no.
sounds like a mix up.
Hold on. But you all say anti-money laundering?
No,
No,
we on
definition of money laundering.
definition.
So chapter name, client due diligence requirements.
Let me go back to the front. 1 second. Sorry to hold it up.
That's okay. Make sure you're still on the same page with us.
Okay. Uh-oh, I got the wrong book. That's the problem. I have to go find the right book. Sorry.
Okay.
Sorry.
All right, good. All right, so we'll give you a moment, and who could help us now to start off? Someone was talking just now. They could help us.
I can start.
Okay, thank you kindly.
Hello? Sorry, sorry. Well, let me stop. I didn't see the mic on the mic on mute. You have to
We
start at the
didn't hear
beginning. I
anything.
never heard anything. Don't hear nothing? Wow. Okay. Money laundering is defined as a process by which criminals attempt to conceal the true origin and ownership of the proceeds of their criminal activity. If undertaken successfully, money laundering allows launderers to maintain control over those proceeds and ultimately to provide a legitimate cover for their source of income. The primary objective of the money launderer is to disguise the source of criminally derived property so that it cannot be attributed to the original criminal activity or activities of the launderer. In order to achieve this primary objective, criminals seek to disguise their own identity, conceal their ownership of criminal-derived property, and conceal the fact that they manage and control criminally derived property.
So where we get this, where this definition was described earlier, what we say about that? What happened when we say if they don't follow up with the clients, they allow the clients to use them to do something? What we said about that, y'all remember? Where the company will be, the veil will be moved. Remember when we talked about if you didn't do your due diligence on the client, and they got circumstances where they allow the company to be used to for criminal enterprises. You remember that? No? Y'all remember that? No? That's
No,
maybe
ma'am.
so.
No, ma'am.
When we started off earlier, and I think it was unit 1 or 2? Let me see. Now, I tell y'all we have to relate back so y'all can remember what we read before,
Yes, ma'am.
right? So when we started out initially, we said sometimes a company, they have to do their due diligence where they acting as directors, normally directors for companies. They're supposed to ensure that who they're acting for. Y'all remember that at all? Maybe.
No.
Let's go back to the directors. Where they are acting as shareholders or directors, and they don't know who they're acting for. Yes? No? When they have to ensure who it is they're acting for so that they're not holding shares for somebody who may be doing laundering money or something. Look on the bottom of page 49. Y'all remember that? That's only a couple pages ago.
I'm still trying to look.
Now that I'm looking at it, I vaguely remember.
Right, so it is important to know that the potential liabilities of a nominee shareholder not to be confused with the potential dangers of providing such a service to offshore clients, particularly in a financial environment where sophisticated white-collar criminals seek to use offshore companies to hide or launder money from illegal activities and keep themselves and the source of their funds inconspicuous. Remember that now?
Yes, ma'am.
So remember, I tell you, everything what we reading forward is expanding on what we read before, right?
Yes, ma'am.
So keep relating it back. So we talking again about where you may be acting and you assisting a money launderer. So you could be doing that by just in a company, right? As a shareholder or some sort of you've not done your due diligence. So you need to make sure you have strict KYC requirements. And then you establish or verify the source of funds and the nature of the client's business before you offer services to a client, right?
Yes, ma'am.
So now you see that was only a few pages that come clear to you all now what we talked about, right?
Yes, ma'am.
Okay, let's go on.
3 stages of money laundering. Placement. The physical disposal of the cash proceeds which have been received from the illegal activity into the financial system. 2. Layering. Separating illicit proceeds from their source by creating complex layers of financial transaction designed to disguise the true identity of the source of funds. Integration. The provision of apparent legitimacy to criminally derived wealth. If the layering stage has been a success, the illegally obtained funds will now be integrated into the financial system and appear to be legitimate funds. The commission of all 3 stages of money laundering is not necessary for an individual to be prosecuted for the offense of money laundering. Once it can be proven that he has contributed to the money laundering process by knowing or suspecting that the source of his or launderer's funds has been criminally derived, and or he has participated in any one or all of the stages of the money laundering process. It is important that a financial institution consider the money laundering risks posed by its products and services, particularly where those products and services are vulnerable to being used in the layering and integration stage of the money laundering process. The Proceeds of Crime Act 2018 (POCA) defines what is an identified risk offense under the Act, that is corruption, cybercrime, human trafficking, money laundering, or financing a proliferation of weapons of mass destruction, terrorism, or financing of terrorism, or such other risks as prescribed by regulations. Part 2 of the POCA outlines the offenses defined as money laundering, identified as money laundering. Section 9, concealing. A person commits an offense of money laundering if acting with knowledge or reasonable suspicion, conceals the proceeds of any crime, disguises the proceeds of any crime, converts the proceeds of any crime, transfers the proceeds of any crime, removes the proceeds of any crime from the Bahamas. Section 10.
Okay,
Arrangement.
before we go to section 10,
Yes,
what are
ma'am.
the 3 stages of money laundering?
Placements, layering, and integration.
Okay, so we need to know that. What act deals with money laundering?
Man,
What
geez.
act? What act we dealing with for money laundering?
Proceeds of Crime Act 2018.
Okay, or POCA, right?
Yes, sir.
Yes, sir.
And what is it defined? What it defines?
Identified risk offenses under the
Right,
Act.
right. And so now we go into how it is defined under part 2 of the act, eh?
Yes,
So
ma'am.
part 2, section 9 deals with first concealing. So we got to pay attention to these things. So we deal with concealing. So the person commits an offense. If acting, he conceals the proceeds, disguises, converts, transfers, or removes. So that's the first part of it, eh? So you see that could happen in anything. You could conceal. How could you conceal the proceed of crime as it relates to a company?
By not keeping financial records properly.
Or we concealing it by saying it's a different owner, or showing
Oh,
it. You see,
yes,
we
ma'am.
could disguise it or conceal it, or we convert the proceeds into what? Into the shares of the company, eh?
Yes, ma'am.
Transfer money from somebody else into this company, or we remove the proceeds of crime from the Bahamas. That could be dealing with, we get the money in and then we send it back out. Yes?
Yes, ma'am.
Okay, go ahead.
Arrangements. Section 10, arrangements concerning proceeds of crime. An offense is committed of money laundering if the person knows, suspects, or ought to reasonably have known or suspected that he has entered or is entering into an agreement which facilitates by whatever means the acquisition, retention, use, concealment, or the control of proceeds of crime by or on behalf of another person. Section 11. Acquisition, use, and possession of proceeds of crime. An offense of money laundering is committed where a person knows or suspects or ought to reasonably have known or suspected that he has acquired or is acquiring the proceeds of crime, use or is using the proceeds of crime, or possess the proceeds of crime. The 3 ancillary offenses under POCA are 1. Section 12, failure to disclose. An offense is committed under the section if each of the following conditions are satisfied: failing to disclose the financial intelligence unit or to a police officer that one knows, suspects, or reasonably ought to have known or suspected that another person is engaged in money laundering or committing an offense related to an identified risk, that the information or other matter on which his knowledge or suspicion is based, or which gives reasonable grounds for such knowledge or suspicions came to him in the course of his business, that one does not make the required disclosure as soon as a practicable or as practicable after the information or other matter comes to the person.
So in this instance where you fail to disclose, what could that be? What happens? Somebody come to you with a big sum of money as a client saying, oh, I want to invest this. Are you supposed to, find out some things, eh?
Yeah, like where the money came from.
Uh-huh. So if you just take it, what you've done, you've facilitated that, eh?
Yes, ma'am.
Because you've found out and you still are required to make disclosure whether or not the person continues with you, eh? Because you have to say they approach you in any instance, eh? You have to go to the financial intelligence unit or to a police officer. Unless you will be committing an offense under section 12. Now remember, these are ancillary offenses to the first set of offenses, which is concealing, arrangements, or acquisition. These happen in concert with these first three offenses. So as much as you may be charged for those first three, these will be ancillary to those. So they happen at the same time. These happen as a result of the first three, okay? So then they will compound the offenses, more or less. You understand that?
Compound the offenses.
Right. So what happens is, okay, concealing. Let's just say we arrange an offense is committed of money laundering if the person knows, suspects, or ought to have reasonably known or suspected that he has entered or is entering into an arrangement which facilitates by whatever means the acquisition, retention, use, concealment, or the control of proceeds of crime by or on behalf of another person. So you would have committed the offense if you did this, right? So in addition to you committing this offense, arrangements concerning proceeds of crime, you have an ancillary offense which is also committed at the same time. Because you failed to disclose to the FIU, this offense happened. You understand now? So you're not just going to be charged with one thing, you're going to be charged with more than one thing. Because if you had not done this, this ancillary offense could not have occurred. So just let's use, for instance, you shot somebody and you kill them. Yes? You will be charged with murder. Yes?
Yes.
In addition to you being charged with murder, what else you're going to be charged with? What is the ancillary offense?
Possession of a deadly weapon.
Okay, you all got it. Excellent. You see now?
Mm-hmm.
Okay,
That's all.
so that's the what's the major offense?
Killing the person.
Right, and the ancillary is?
Having a weapon
in your possession.
You having the weapon in your possession. So now, what is the major offense in this?
Money laundering.
No, tell me what section, which sections are the major parts? 9, 10, and 11.
Concealing. I would say 11.
Arrangements and acquisition.
Mm-hmm.
And what happens as a result of you concealing, arranging, or acquiring? You will fail to disclose. You fail to disclose first.
Mm-hmm.
Then there's failure to disclose by the money laundering and reporting officer, and then you fail to tip off.
Mm-hmm.
Okay? Do you all see how that works?
Yeah, so it's a twofold situation.
Excellent, excellent. Okay? Just want you all to keep that in mind as we're reading, so you'll see how it works. So more likely than not, if they take you before the courts, you're not going to be charged with one offense. They will stick all of these on you. Okay?
Lord.
So let's pay attention to how they work in it, okay?
Yes, sir.
Okay, go ahead.
Section 13, failure to disclose by the LMRO. An offense is committed where the LMRO knows or suspects or has reasonable grounds for knowing or suspecting that another person is engaged in money laundering or unidentified risk activity. Any information from an alleged offender on which the knowledge or suspicions of the LMRO is based or which gives reasonable grounds for such knowledge or suspicion, and the LMRO does not make the required disclosure as soon as it is practicable after the information or other matter comes to him. Section 14, tipping off. An offense is committed if one knows or suspects that any disclosure under the Part 2 of POCA has been made, or an action has been taken by the FIU in relation to anything under Part 2 of POCA, and one makes a disclosure to another person which is likely to prejudice any investigation which might be conducted following the disclosure made. Legal requirements for customer due diligence. The financial.
Okay, before you move on,
Yes, ma'am.
so we have tipping off. What you have to do in tipping off? What you think happening in tipping off?
You letting the police know?
No.
So you're giving them information.
You're letting the
Who you giving
client know.
information to?
The client.
Yeah.
Right, you tipping them off.
You
So you
tipping off the
letting them
client.
know they looking into you. So
Yeah.
you now this another section of the offense. Now this should be
Oh.
number 2. So you telling the client, they looking into what you doing. I just letting you know, but you don't say nothing but I letting you know. So what you do, you allow the client to get away.
Yes, ma'am.
Okay, so you now could be charged with tipping off as well. Okay. All right. Symphony, you found your book?
Yes, ma'am, I found my book.
Okay, so Kazira, thank you. You could go ahead with legal requirements, please.
Enhanced due diligence.
For customer due diligence, yeah.
So legal requirements are started enhanced.
Legal requirements for customer due diligence. That's on
Sure.
63 if you're in the same book.
63, the Financial Transaction Reporting Act 2018. FTRA outlines the customer due diligence measures and the Financial Transactions Reporting Regulations 2018. FTRR outlines the customer due diligence requirements under Bahamian law. Individuals, entities, trusts, and other legal arrangements and partnerships or in unincorporated businesses for the acceptance of business. Pursuant to the FTRA, it is mandatory that financial institutions conduct a risk assessment to identify, assess, and understand its identified risks related to its clients and countries, jurisdictions of their origin, countries, jurisdiction of operations, and product, services, transactions, and delivery channels. The FTRA Section 7 mandates that financial institutions identify the identity of a facility holder by means of verifying reliable independent source documents, data, or information. Identify and verify the identity of any person purporting to act on behalf of a facility holder and verify that such person is properly authorized to act in that capacity. Understand as appropriate, obtain information on the purpose and intended nature of the business relationship, including the ownership and control structure of the facility holder. Identify and verify the beneficial owner of a facility, and if corporate, beneficial owners of 10% or more controlling interests. The FTRR states that mandatory documents required by financial institutions to verify the existence of a facility holder. Simplified due diligence is conducted on facility holder identified as low risk, unless there is a suspicion of activities related to an identified risk in which enhanced due diligence is required.
Okay, so now, in accordance with the Financial Transaction Reporting Act 2018, we have some customer due diligence measures that must be taken, So do you recognize any of these and you opening a bank account here in the Bahamas?
Oh, they have to verify who you are.
Right, so what usually happens? They ask you for what,
Your passport and possibly an NIV.
right? What else they want to know from you?
They want to know where you live
Excellent, and so they verify that by what?
using a utility bill
Right,
or a letter from a landlord.
certainly. What
With
else?
his bill.
Here's the voter's card.
Right,
So they have address on it.
excellent. What else we gonna ask you for?
A source of funds.
Source of funds. So how would you verify your source of funds?
Possibly a pay slip, job letter.
Right.
Or if you're bringing funds from another bank, maybe a manager's check or a receipt where you withdrew these funds.
Excellent. And then in the instance of us being a company where the beneficial owners 10% or more, they have to provide this information as well. They have to provide the same information an individual person would have to provide. Now, in instances where there's suspicion or this is only in a low risk setting, eh? When there's high risk, what you're gonna look for? Some more information, right?
Surely.
Yeah, so you may ask for, well, if you have, in addition to your salary, where else you getting money from? Can you provide me the reference from the bank or so forth? Or they may ask for character reference or some other thing, okay?
Yeah.
So this is just on the low risk. On the high risk, they will certainly ask you for additional information. So that's the FTRA. And so we do that on a daily basis in us dealing with the banks, yes?
Yeah, and then even sometimes when they're doing their KYC refresh, if they have an issue with some of the information provided, the account might be suspended.
Yes, and you'd have to verify that information, or they may actually close your account if you're unable to, eh?
Surely.
And usually now the banks are putting people through this often, eh? How often do they do it now? Once a year, twice a year? How often do they come back to you, annually or biannually?
I've seen things in about 2 to 3 years.
Okay, so I know sometimes they do it when you go there, they said, oh, we need some updates from you, we'll have to freeze your account. And it could be an inopportune time when they decide to freeze your account if you have not gotten the information to them within the time they asked you to do it.
Yeah.
So this happens daily. So we are familiar with this, but now we know what to relate it to. So we don't have to row out the tellers now. We can say, okay, they only doing their job in accordance with the FTRA. Yes.
I just personally feel too, it's the way that they do it sometimes too, you know?
Yeah, they really turn you off, and you know sometimes they do their job, but it just don't be the right time, especially when you're trying to get something done.
That's all.
But you know, I think they do it to hold you hostage at the last minute, because had they followed up enough, they wouldn't have had you in the position where you are at when you really need to use your account. Because if they gave you sufficient warnings, I mean, sometimes they say they do, but I don't know that they do. But they surely hold you hostage at the last minute.
Yeah, and I don't think many banks have the resources per se to continuously follow up with a client. They might send you a one-time reminder, right?
Yeah, that's
but
what
most of them don't have the resources to be up in your face every day.
And so when pressure on them, then they just pressurize you, and when you look your account freeze, and you're ready to download everyone in the bike.
If you're using your account regularly, you will come across at one point within the 2 years frame that they would have been able to advise you that you need to update your account.
Right.
So if you was not to come to show you really need it and your account is frozen, clients often find that information really quickly.
Very quickly. But by then they're ready to close out. They're ready to close the account by then. You know, when you freeze the account, especially if someone away, they ready to, when they come back, that's the end of you and them.
But not even just that though. I mean, the thing about it is most banks, especially for their high net worth clients, they can tread lightly before they do something like that. So most times that may be a common experience.
Yes.
Yeah.
Some banks are more diligent than others in some instances. But I know Commonwealth Bank, they're famous for that.
Oh, I never had it. I don't know how they go that
Yeah.
deep. But you know something though, they don't do this all the time for people who they lending money to.
No, that's
always-
if they were doing that, things would be different.
Correct. I
Yeah.
always find that so interesting.
Right. That means they have a slack on one end, and then they want to be tight on some end. So they just want to show that they have some controls in place, I guess, for audit purposes. But not when it comes to who they lend to, because I don't even think they verify really that you could pay the loans back.
That's true.
They just want to get a quick buck,
That's true.
and that's the end of that.
Mhm.
But we'll see. Okay, so enhanced
Yeah,
due
you
diligence.
can't try to put on your card now. Go ahead. Go ahead. Sorry about that. Let me.
Okay, enhanced due diligence.
A financial institution is required to conduct enhanced customer due diligence to business relationship or transaction with facility holders, beneficial owners of financial institution from a jurisdiction assessed by the IRF, identified risk framework. Steering committee comprised of key government agencies, and such enhanced measures are proportionate to the risk identified. The financial institution is required to examine as far as possible the background and purpose of all complex, unusually large transactions and all unusual patterns of transaction which have no apparent economic or visible purpose. A financial institution is also required to mitigate against the risks identified with respect of facility holders, beneficial owners, or financial institutions assessed as high risk. Politically exposed persons. A financial institution is required to have in place appropriate risk management systems to determine whether a facility holder or beneficial owner is a politically exposed person, PEP. The identification of a PEP should be made prior to establishing or continuing a business relationship with such facility holder or beneficial owner. The approval of senior management must also be obtained. The financial institution must also identify the source of wealth and source of funds of the facility holder and conduct enhanced ongoing monitoring of the business relationship. PEP has been defined by the Basel Committee on Banking Supervision's paper Customer Due Diligence as individuals who are or have been entrusted with prominent public functions, including heads of state of government, senior politicians, senior governments, judicial or military officials, senior executives of publicly owned corporations, and important political party officials. The Basel Committee definition also extends to an official's family, close associates, and to any business, incorporated or unincorporated, with which the official has a relationship. As far as KYC, knowing whether or not a client is a PEP is an essential element of customer due diligence and risk rating. Example, PEPs are considered high risk. A financial institution should consider the following KY information in mitigating PEP risk. Once it is decided to accept the PEP client: geography, source of wealth, source of funds, commercial rationale for the arrangement or relationship.
Okay, so with us with these PEP, should now, if the bank is doing their due diligence, when these monies coming in, should the public be concerned that these people could hide away money? What you think? So if the government giving out contracts and you see that this person who's now in political life is making some large deposits outside of what their salary requires, or they had a business, you know, the source of their wealth and how their business was running before they came into office. Now you see some unusual activity going on. Should that not raise a red flag?
Yes, it should.
Because now you should be looking at where these source of funds coming from. Because now you know what happens. They've been entrusted with prominent public functions, including heads of state or of government. So now you know that they may be senior executives of publicly owned corporations and important party officials. So now you should be paying some attention to their accounts. Their accounts are what now? Are they low risk accounts?
Their account should be monitored on a different level than any other individual.
So these high risk accounts, eh? Because this is where corruption could happen, eh? So the bank will be facilitating corruption because they should know some things unusual about the account. If you see some unusual amounts coming in, and only within this time since they've been appointed, eh? So that's why usually the bank asks you if you are a politically exposed person. That's always on the application. Are you a
Yeah,
politically
they always
exposed?
ask us to.
Right. So that's what's supposed to happen. They're supposed to be in a category where they're looking at them especially. And if you're a family member, because then you can disguise the money there, eh?
Yes, ma'am.
Yeah, so that's what you want to do. That's what this is all about, that PEP. So this is a part of your due diligence procedures, and they should be in a medium to high risk category. They shouldn't be in low risk, okay? Go ahead.
Internal reporting procedures and training. Regulation 5 of the Financial Intelligence Transaction Reporting Regulations 2001 FITRR requires financial institutions to institute and maintain internal reporting procedures, which include the following: identification and appointment of a money laundering reporting officer who should be registered with the FIU/Central Bank of the Bahamas, and to whom a report is to be made of any information or other matter which comes to the attention of an employee and which, in the opinion of that employee, give rise to a knowledge or suspicion that another person is engaged in money laundering. Regulation 6 requires that a financial institution take appropriate measures from time to time to ensure that all relevant employees are trained and made aware of the provisions of the Financial Intelligence Unit Act 2000, the Financial Transaction Reporting Act 2000, the Financial and Corporate Service Providers Act 2000, the Proceeds of Crime Act 2018, the Financial Intelligence Transaction Reporting Regulations 2001, and any other statutory provisions related to money laundering. The procedures maintained by the institution in compliance with the duties imposed under these regulations. The financial institution must provide all relevant employees from time to time and at least once a year with the appropriate training in the recognition and handling of transactions carried out by and on behalf of any person who is or appears to be engaged in money laundering.
Okay, so what happens? Your institution supposed to do this? How often?
At least annually.
Right, at least once a year. That's what they usually require them to do. So they should have some session for the employees to go through that just to say they've done it, because I think there's a register you should keep that you've done it with the employees once a year. And so that's under what regulation?
That's under regulation 5 of the FITRR.
Regulation 6.
6? Oh, sorry, 6.
Yeah, regulation 6. That you should do that. Okay, go ahead.
Sure. Know your client / customer due diligence. KYC is an important acronym for Know Your Client. Know Your Client information is information that is obtained and used by an organization to verify a client's identification, gather information about his business, assess and rate the potential risks / risks that the client may present to the organization, and make a business decision on whether or not to accept the client and his business. CDD is the acronym for Customer Due Diligence. Customer due diligence is additional and/or more detailed information that is obtained from a client by an organization in order to update a client's information other than the original KYC information on acceptance, further assess the potential risk that a client poses to the organization, monitor client activity, and mitigate and manage client risks. It is important for a financial institution / financial and corporate service provider to establish Know Your Client KYC policies and procedures as a part of its due diligence process in order to effectively and thoroughly vet prospective clients and consistently monitor existing clients, particularly those for whom it provides corporate, financial, and fiduciary services. The FTRA Section 12 makes it mandatory for financial institutions to exercise risk-based ongoing due diligence throughout the course of each business relationship, which includes the following: ensuring that documents, data, information, and records collected are kept updated and relevant, and undertaking regular reviews of existing records, particularly high-risk facility holders, scrutinizing transactions to ensure that the transactions are consistent with the financial institution's knowledge of the customer, the facility holder's risk profile, and the source of funds where necessary, ensuring the obligations with regard to high-risk facility holders, politically exposed persons are fulfilled at all times.
So now we see what section dealing with that, where we update ourselves often on that as the bank or the facility. That's section 12 of the FTRA. So that's ongoing due diligence, eh?
Sure.
Go ahead.
One of the primary objectives is to ensure that a financial institution's clients are of good reputation and character and their business activities are lawful within the ambit of existing laws of the Commonwealth of the Bahamas and international best practices as it relates to anti-money laundering, customer due diligence, and corporate governance. Whenever a person conducts or seeks to conduct any transactions through or with a financial institution, whether or not the transaction or proposed transactions involve cash, and the financial institution knows, suspects, or has reasonable grounds to suspect that a transaction or proposed transaction involves the proceeds of criminal conduct or offense to is an attempt to avoid the enforcement of POCA or is an identified risk, it is mandatory that a financial institution report the transaction or proposed transaction as soon as possible to the FIU, Section 25 FTRA. A suspicion transaction report is a written report which sets out and contains the grounds to which a financial institution holds a suspicion about a particular client and or transaction or series of transactions that may involve the proceeds of criminal conduct or an offense under a specific legislation which criminalizes money laundering, example, Proceeds of Crime Act. Failure to make an STR will result in criminal liability in the form of fines or imprisonment for the MLRO and or the financial institution as applicable. Section 15(2) of POCA, a person commits an offense if they fail to disclose in their capacity as an individual, firm, or sole practitioner, acting in the capacity as an accountant, audit, taxation, advice or services, legal or notarial services, or as the MLRO, following the satisfaction of the three conditions, are liable on summary conviction to imprisonment for a term not exceeding 12 years, or to a fine not exceeding 500,000, or to both, or on conviction or an indictment to imprisonment for a term not exceeding 20 years, or to a fine, or to both. Section 25(2) sets out the requirements must be followed to submit a STR to the FIU. The STR must be in the prescribed for contain the statement of the grounds on which the financial institution holds the suspicion and contain the following information as set out in the first schedule of the FTRA: the name, address, date of birth, and occupation of each person in conducting the transaction. The name, address, date of birth, and occupation of any person on whose behalf the transaction is conducted, where an account with a financial institution is involved in the transaction, the type and identifying number of the account, the name of the person in whom the account is operated, the names of the signatories to the account, the nature of the transaction, the amount involved in the transaction, the type of currency involved in the transaction, the date of the transaction, the name of the officer, employee, or agent of the financial institution who handled the transaction, the name of the person who prepared the report.
Okay, so you see what they'd have to do when a suspicious transaction comes across. They have to now fill out this information and send it on to where?
FIU.
Okay, for them to now investigate whether this is in fact an offense that has been committed. If they don't do it, then what have they done?
They're now putting themselves in the hands of many
So what we could charge them with?
covering,
What's the offense?
failure to disclose.
Failure to disclose. And so what they've done? What's the main offense?
Concealing?
They concealed?
That's abetment of money laundering, eh?
So they concealed it first, and then what happened?
They concealed it and then failure to disclose?
Okay, or they could, because they've not acquired it, but they could have been arranging as well, eh? Right? That could have been an arrangement, or it could have been concealing, eh?
Yes, ma'am.
And then the ancillary offenses, they failed to disclose. And if it was the money laundering and reporting officer, it was failure to disclose by them, right?
Yes, ma'am.
Okay. And so then we'll fill out a form, right? In accordance with what?
The form will have
What
according to
section
section
deals with this?
25 of the FTRA.
Okay, and the form is set out in what section? This first schedule? And you would
Section.
have to fill in all of this information that the form in the first schedule sets out. But this is not for you as the employee to do, right? You should have a who? Who should be doing
Money
this?
The
laundering
MLRO.
Excellent, MLRO. Okay, go ahead.
Sure. KYC/customer due diligence best practices. The following information may be appropriate to verify client identification and assess whether to accept and or maintain a client. The full name, home and business addresses, including telephone and facsimile numbers and email addresses. Nationality, occupation, and date of birth of the ultimate beneficial owner of the companies, principals, professionals related to or concerned with the client. 2 reference letters from a reputable law firm, accounting firm, bank, or other financial institution. The reference letters must be original letters on the letterhead of the law firm, accounting firm, or bank, etc. Indicate the nature of the relationship with the ultimate beneficial owner and principal, which should be at least 6 months old and may be fairly recent, no more than 6 months to a year. Copies of the relevant pages of the passport of the ultimate beneficial owner/principal, indicating and verifying the identity and relevant particulars of the person. Where there is a reason to believe that a person holds dual citizenship nationalities, the relevant pages of both passports are required. Copies of a recent utility bill or credit card statement in order to verify the client's current address. Alternatively, copies of the identification cards of the ultimate beneficial owner principal is required. Copies of driver's license and other forms of identification as permissible by Bahamian law may also be accepted. Specific statement of purpose for the incorporation establishment of the company, name, address, and relationship of the correspondents acting on behalf of the ultimate beneficial owner/principal. Name, address, and relationship of the correspondents acting on behalf of the ultimate beneficial owner principal. Should I continue?
Sorry, I thought my thing was on, I was talking. So this information, what we say about this? Isn't this what usually is provided to the bank even as a low risk person, eh?
Sure.
So we have all of this information. We get reference letters in some instances, if they are required. Alternatively, we have copies of identification cards of the ultimate beneficial owner or driver's license. But I know they want to see a passport more than anything, eh? Specific purpose for incorporation or establishment of the company. So this is now where we're dealing with what? In this instance, where we remember this right here from, the specific statement or purpose for the incorporation establishment of a company. Where we remember that list
In
from.
the memorandum?
So no, but where we remember that list from? Requirements for what? Incorporation of an IBC, remember that? You all remember our list, what we needed? You know, I have to keep carrying y'all back to what we already do. Remember that? Remember we had a list what we needed to ensure for corporate record keeping purposes?
Yes, ma'am.
And what that was? When they come to us for us to incorporate the company, we had to have a list, right? What we keep as a part of our file, and for us to now incorporate the company for you.
That would be requirements for the incorporation of IBCs.
Okay. Give us the page.
Page 36, I'm assuming. No, that's page 35. Page 35 and 36 basically speaks to it.
So okay, so 36 is where we'll find it. And then we go on to, you see number 7, say provide the objective and purpose. And so now we have a checklist. So y'all remember this now?
Yes, I remember it. Yes, ma'am.
Okay. So we just keep relating back to where we going now with this. So this is a part of the KYC, due diligence best practices, okay?
Mm-hmm.
A name and a relationship of the correspondent acting on behalf of the ultimate beneficial owner or principal, who that may be in this checklist.
The correspondent beneficial owner.
No, correspondent acting on behalf of the beneficial owner.
That would be the office of the registered office.
No, remember we have some instances where we have some intermediaries. You remember the intermediaries? Who may be law firms,
No.
banks, you remember that? Y'all remember that? Nobody remembers that?
Mm-mm.
Vaguely.
So let's go to the page what deals with, because I remember I tell you, I'll put a little note next to it so y'all could go back and forth like it's a reconciliation, eh? So you'll know when you're talking about something, how it goes back to what you've read before.
Okay.
So we're gonna find out now who are your, remember we went through this and we said, you have to know who are the intermediaries and because now you're dealing with them on behalf of the company, right? Or they may be giving you information. You don't recall that? Anybody? No?
I'm trying to look back and see if I could find where I made a note of it.
They actually give you the outline. Where we say who they acted in on behalf of, you have to know these people as well. And the left side, okay. Get it so y'all could go back to it. Look on that same 36. And that's number 8. You see it?
Yes, ma'am.
So we have to provide the name. So in this instance, what we say it?
Banks, law firms. You mean bank, where it says example, banks and law firms?
Mhm. So what we put there? Name and address. Name, address, and relationship of the correspondent or correspondents acting on behalf of the ultimate beneficial owner or principal. These people may be acting on their behalf, eh? This may be your client who's now representing the ultimate beneficial owner. So it may be a bank, a law firm, etc., as applicable. Because not all the time in this instance, you're going to deal with the ultimate beneficial owner directly. You may have a company acting in the middle. They're the intermediary. So they may say, we want you to incorporate this company on behalf of our client. And so they will have to provide you with all this information. So you have to get all of that. You have to get the name, address, and relationship of the correspondent. So provide names of intermediaries. You have that same thing. So you see what I'm saying, that everything is repeated. On page 36, you see number 8 is the same thing here.
Yes, ma'am.
Okay, so just put a note there so y'all can remember to put it back. So anyway, the question comes, you realize what they're asking you about, okay? Because it's the same thing, it's just in a different context. That's clear?
Yes, ma'am.
put page 36 there, and that's number 8. Everyone that's clear?
Yes.
Okay, additional requirements for US clients. Dominic, you could help us now?
All right. I hope my internet stays up. I was having some issues.
Okay, if we see you fall off, we'll pick up with Sanika.
Okay, additional requirements for US clients. US citizens must provide some evidence that they have been advised of their legal and tax reporting requirements in the United States before establishing an offshore corporate entity, and in certain instances, provide us with an affidavit that they will continue to meet such tax reporting obligations themselves without any liability to financial and corporate service provider for any omission or advantages, advertences in completing such requirements. Additional requirements for Canadian clients. Canadian clients must provide some evidence that they have been advised of their legal and tax reporting requirements in Canada before establishing an offshore corporate entity, and in certain instances, provide us with an affidavit that they will continue to meet such tax reporting obligations themselves without any liability to the financial and corporate service provider for any omission of or inadvertences in completing such requirements.
So in addition to the KYC, we want something from the US and the Canadian citizen showing that they will continue to meet their obligations as a tax-paying citizen of each of those countries, so that we won't be attributed with any liability for their lack of adherence,
Isn't that what FAFTA is all about?
Right, so you have to make sure that so they usually ask you to fill out that form,
Right.
Whether or not you're a US citizen, they will make sure they've covered themselves sufficiently with you filling out that form to say whether you're not required to make any declarations to the US or other tax country, So you would fill out that form and go from there, but it's usually the USA. I don't know that they have your banks deal with for Canadian purposes, or that FATCA form is usually for the USA.
The FATCA is usually because that's a United States requirement.
Right, so I don't know if the other countries have it. So in that instance, you may ask them just to fill out some information to say that they have done what they need to do. But obviously there's some requirements for Canadian citizens, so there must be something recognized in the Bahamas to deal with that. But I know that form usually relates to, it usually specifically says about US, saying you don't have any obligations or you don't pay taxes in the US or the like. Okay, go ahead.
Requirements of closing and widely held companies, where the ultimate beneficial owner of a list company listed on a recognized stock exchange, a copy of the company's annual report, Bloomberg extract, or stock exchange filing must be obtained, and a specific statement of purpose for which the company is being established is required. Where the ultimate beneficial owner is a widely held company, a company with 3 or more unrelated shareholders, none of whom have a controlling interest in the company. A copy of the prospectus extract of the share register, written confirmation from the lawyers, auditors, or an extract from Bloomberg, Reuters, and a specific statement of purpose for which the company is being established is required.
Okay, so where the ultimate beneficial owner is a listed company, that is one listed on the stock exchange, you must provide the company's annual report, a Bloomberg extract, or the stock exchange filing. In addition to that, you must provide a specific statement or purpose for which the company is being established or is required. Where it's a widely held company, that's a company with 3 or more unrelated shareholders, and they don't have a controlling interest in the company, they should provide a copy of the prospectus. So the prospectus is the document outlining what the company is all about, and if you're interested in joining in or purchasing shares in there. So they send out these documents to invite you to come in, and they paint a picture of how you can make money in this company, eh? So they'll give you also an extract of the share register, written confirmation from the lawyers or auditors that the company is in existence and what is going on with it. The extract from Bloomberg or Reuters, and a specific purpose a specific statement of purpose for which the company is being established or is required. So you would put all of these in there when it's a closely and widely held company. Okay, go ahead.
Requirements for trust. Where the beneficial owner is a trust, the full name, home and business addresses, nationalities, and occupations of the settlor, beneficiaries of or class of beneficiaries are required, and the protector, if any. The name and full address of the trustees shall also be obtained. Copies of the passports, identity cards of the settlor, and beneficiary statement of purpose for which the company is being established is also required.
Okay, so where the beneficial owner of the company is a trust, then we'll get the full name, home and business address, nationality, and occupation of the settlor. So who settled the trust? That's the first thing we'll do. Then we'll get that information from who are the beneficiaries or class of beneficiaries of this trust, and who's the protector, because the protector would be the one who gives instructions on behalf of the trust. We'd also need to know the name and addresses of the trustees. So the company is owned by the trust. The trust has a settlor, the trust has beneficiaries, the trust may have a protector. In addition to that, the trust has trustees. So you may have UBS trustees, UBS is trustees for the ABC Trust. And ABC Trust owns CDE Company Limited, because they're the shareholder of CDE Company Limited. So you need all this information. You need the copies of the passports or identity cards of the settlor and the beneficiary, and the statement for which the company is being established is also required. So what is the purpose of you establishing this company? It's a holding company for the trust assets. Simple as that. Okay?
Eligible introducers. Where a correspondent intermediary or eligible introducer, example, bank, law firm, financial institution, fiduciaries, etc., introduces a client to the firm, there should be some independent verification of the correspondent intermediary to ensure that it is in good standing within respective jurisdictions and professions, and that it can be reasonably relied upon to have conducted its own due diligence screening of the client. Where necessary, a written verification of the due diligence screening and approval of the reputation and character of the client should be obtained and should be in accordance with standard KYC policies and procedures.
Okay, so we going back again. So in addition to the intermediary, you going back to page 36 on your requirements. In addition to you now checking them off on your list, and they introducing the client, say, you need to now ensure that they have done the proper due diligence required for them to introduce this client to you, right? So you may want a copy of what they did as a backup to say that they did what they were supposed to do. And then you want to make sure that they are reputable before you take their information as gospel, eh? So they would provide you with what they did to say they screened their client. So you may ask for that as well. So this is not only for you to just say, okay, ABC law firm said that this client has done all they had to do. They will say, will provide me with the documents that they provided to you, so we can ensure that you've done what you were supposed to do. And additionally, I'm going to check your reputation out to see that you're in good standing in your jurisdiction before I take and rely on information you've provided me. Okay? Go ahead.
Provision of nominee and authorized signatory services. Where the financial and corporate service provider is providing a nominee shareholder to a company or holding shares under a declaration of trust, the relevant nominee agreement or declaration of trust document must be completed, agreed, and executed by all parties. The identification of the ultimate beneficial owner must be known, verified, and approved, and information provided to the firm as required above, passport, reference letters, etc. Where the financial and corporate service provider is given signing authority or any authorization thereto with regard to its position as a director or authorized signatory, the client must complete a declaration of source of funds, provide us with all information required in the foregoing paragraphs relating to nominee services, and certified copies of the relevant pages of his passport. A management agreement for corporate director services, fee agreement for client services generally, and a service agreement for corporate services generally must be accepted, completed, and executed by the financial and corporate service provider and the potential client before the dispatch of the corporate documents. Any further documents are for failure to comply. And in certain instances, such agreements should be agreed and signed before undertaking or initiating work on the client's behalf. An internal legal and compliance audit will be conducted on all client files on a quarterly and/or semi-annual basis, notwithstanding the necessity or compulsion by law to do before such time and on a more consistent basis, in order to ensure that all clients have met the financial and corporate service providers' KYC requirements and any statutory requirements that may be in existence at the time.
Okay, so now they saying that these things should happen when you are providing nominee and authorized signatory services, eh? You should ensure that you have done your legal and compliance audit on the client's file on a quarterly or semi-annual basis. That may not often happen because, of course, some places don't have the resources to keep up with that, to do their due diligence as they should. So they have to ensure that they have something, at least if they don't have it semi-annual or quarterly, at least on an annual basis, eh? Now, where we relate this back to, this provision of nominee and authorized services, where this comes in, we read this before, right? Now they just expanding on what we have to do. Remember this section of us providing nominee services? Remember we just read this under with the money laundering to do? On the bottom of 48. Remember that? Why is it important for us to have this management agreement and fee agreement for client services where we act as director? What was important about that?
So that we'll know, so that they'll know what they owe us at the end of the day.
Right, but what was important about that if we are director? Can a director profit from his position?
No.
Can't, right? So
No.
how would he be able to do so if it's disclosed, right?
Mm-hmm.
So that's what happened, eh? What we doing here? We providing a service, eh?
Correct.
So in providing the service, in order for us to now not be in conflict with our duty as a director, and one where we put our personal interest first, we should have that agreement in place to show that the company is fully aware that we'd be paid for our services, eh?
Mm. Okay.
So
I didn't
it
understand it
won't
like that
come-
before, so thanks for explaining it like that.
Right, so what we're saying is, we're not gonna say that the director, what is a director? First of all, he is a what? His role as in the company is one of a,
Leadership, management.
but we call it a word. Where we place trust and confidence in him.
Is it fiduciary?
Yes, he's a fiduciary. So you acting in that role, you should not profit from your position. They look into you to exercise for the benefit of the company, eh?
Yes.
So, and they said, as a director, what you can't do. We
You
back
can't
in
buy
unit
shares.
4. What was the outline? What they say you couldn't do as a director, what your duty was? You have to avoid conflicts of interest. You have to act in the best interest of the company and act in good faith. So when they look at you, you shouldn't profit from your position. So in order for you to profit as a director, what you have to do?
You have to be paid a salary.
So, and how would you be paid a salary if you acting in the back? Because now your salary may come before the company. So because I'm getting paid a salary, what has to happen?
You have to sign the document saying that.
Otherwise, they may say you getting secret profits or you getting profit from your position, eh? And so they're saying now your personal interest may come, you put your personal interest before the company. But no,
Mhm.
we have an agreement in place that I would be paid for my services because you only came to me because I'm acting in the capacity of a professional director. So I want to make sure that the management agreement is in place. And do we have that set out as one of the requirements? Do we have that set out for us to make sure we have?
It needs to be set out.
Do we have it in our checklist?
Yes, we do.
Where we find that? Look on page 37, number 18.
Prepare management and or nominee agreement as applicable.
Right. So now make sure you put your little note there to know where you look back on that, to see what they're talking about when you're looking at your checklist. And if you were answering a question, you would be able to expand a bit on it, you see? So not only you would say, as a part of the checklist for post incorporation, we should prepare a management and a nominee agreement. What we can say.
We
So
can
in
say that
preparing-
John Doe is a director of this company.
Mhm.
However, he has signed an agreement whereby he will be paid for his services at XYZ rate. And he still knows that he has to act in the ethical and best interest of the company XYZ.
Right, in the instance of a director, but when we doing the checklist for post incorporation, we'll say, as a part of your checklist, you should prepare the management and a nominee agreement for corporate director services,
Mhm.
which must be what? Accepted, completed, and executed by you and the client before sending the corporate documents to who?
To the client.
Right? And in some instances, what you have to do, ensure that this is signed before what?
Before release.
Before you even start the work. You see it right here. All of this information right in this. What I'm saying to you is this expands on just that one line on number 18. So if you were answering the question on the checklist and you put these extra points in there, your points just expand on your exam because it shows you have a full understanding of what this management and a nominee agreement is. So when you saying, I'm giving you a checklist, so they may say, what is the checklist required for you to now, for a company incorporation and post incorporation? So when I say reserve a company name, what else can I say instead of just saying reserve a company name?
Reserve a company name along with ensuring applicable documentation is signed.
No, I want you to expand on reserving the company name. Tell me what else I can say would give me some extra points.
Registering.
On just reserving the company name.
Submitting more than one option.
So
14
in
days.
reserving the company name, I should get from the client at least 3 names.
Deposit. A
Three
deposit.
names. Three
Oh,
names.
Okay.
I need 3 names in order to reserve. And once it's reserved, what happens with it?
You have a certain length of time. You have 30
What is
days.
the length of times? Huh?
Was it 30 days?
No, so in reserving the company name, now remember we on page 36. When I reserve the company name, in order for me to reserve a company name, I should get from the client at least 3 names in order of their preference. In reserving the company name, they allow me 28 days,
28 days.
right? For the
And then,
company name initially to be reserved. And I have to
if
pay
you want to
a
expand, you have 14
fee
days.
of how much, right? How much do I have to pay in reserving the company name?
$50?
How much?
Is it $50?
$50.
No, it's 25. However, if the client provides me a name in
Dual names
English
is
and a
$50.
foreign name, I have to
Dual
pay
name.
$50 for what?
For
Or the dual name?
Dual name reservation. If the client hasn't decided within the 28 days to use the name, they
They
can
could extend it for
further
14
extend
days,
for 14 days at a price of,
$30.
$30
And they
however,
can
this is only
only
allowed
extend
for
it
them
twice.
to extend it.
to do it
right.
twice.
And each time it's a fee of,
$30.
after the second extension, what happens?
They have to reapply.
Excellent.
Return it.
So you see how you've gone on, you know the whole story. You just don't know that one line. You see what I'm saying? If
Yes,
you have
ma'am.
time, you can put all of that in. That's, you see what I'm saying about that, right?
Yes, ma'am.
Yeah.
Likewise, when we said provide names of intermediaries, who we talking about? Where we'll find the rest of that. Where we could expand on that.
Page 68?
What 68 says.
Where it speaks about eligible introducers.
That's 68 or 69.
On my book, it starts at 68 and ends
Okay,
at
okay.
69.
So provide names of intermediaries or eligible introducers. Right?
Yes, ma'am.
So give me some background on that. So we should provide the client should provide or the eligible introducer. So provide the name of the intermediate or eligible introducer who may be a bank, law firm, right?
financial institution,
And
fiduciary.
they are persons who do what? Who are these intermediaries or eligible introducer?
Persons that conduct business on behalf of the company.
Okay, so they're persons so what they do? What are they? It right here on page 69, 68 on your book.
They are financial institutions.
So they introduce a client to the firm.
Okay.
You see that? That's the only reason they'll have a relationship there, because they're introducing this ultimate beneficial owner to you now to do business with them.
Mm.
So provide the names of the intermediaries, and we need some more information from them, right?
Mm-hmm.
They got to give us some written verification of their due diligence, screening approval and reputation of the character of the client in accordance with our KYC. Yes?
Yes, ma'am.
What types of companies we have in that instance? So the client may be asking for when they're using these trusts, when we're doing it for trust purposes, what kind of company they usually will use?
IBC.
IBC. So we dealing with IBCs, yes?
Yes, ma'am.
And they can ask us for the company to be incorporated with what? With shares, right? With the share capital, how they can divide it? Do we have to have a minimum share capital? Is there a minimum share capital requirement?
Okay, I have to look for that one.
Y'all remember that? Is
I
there a
think it was
minimum?
5,000.
Is there one? On page 26.
There is no minimum.
Okay, so there's no minimum share capital requirement for an IBC. So they may not have to provide us with 1A.
No, ma'am.
Okay. So these just little things that I'm showing you. We'll go over a little bit more. But let's answer our questions first before we go into that. One, define money laundering. Where we will find that answer.
Page 60.
Page 60. And what is money laundering?
Money laundering is defined as the process by which criminals attempt to conceal the true origin and ownership of the proceeds of their criminal activities.
Excellent. What are the 3 stages of money laundering? Where we'll find that?
60 and 61.
Okay, and what are they?
Placement, layering, and integration.
Excellent. What are the 4 primary money laundering offenses under the Proceeds of Crime Act 2000? Where we'll find that?
Shouldn't that have been the Proceeds of Crime Act 2018?
Okay, let's go back to it. 2018, so that may be a typo. Yeah,
Layering and integration.
just make sure we have the right one.
That still is only 3A, or is that 4?
Let's see, let me look.
I
and
saw
see.
3. I couldn't figure out.
So I think
Yeah,
it
I
may
only
be
saw 3.
2000, it may be 2018A.
Yeah.
And that
2018.
should be 3 instead of 4?
3 instead of 4, what is it? What are the 3?
Concealing arrangements, concealing proceeds of crime, acquisition, use, and possession of proceeds of crime.
Okay, so what are the 4 primary money laundering offenses under the Proceeds of Crime Act? The offenses identified as money laundering are concealing, what else?
Arrangements
Mm-hmm.
concerning proceeds of crime, and acquisition, use, and possession of the proceeds of crime.
Yeah, so what they talking about for primary? 1, 2, 3, 4. Nope.
That should have said 3, right?
I think so, but I'll make sure that they didn't miss one. So let's just put it there for page 61 in the meantime, eh? 61 to 62, that's where you have it?
Yeah.
Yes, ma'am.
Okay, 61 to 62. What are the two ancillary offenses on the POA? So
That
we
should be
have,
3.
And that should be
so
3.
Yeah,
they
that
may
should
be
be,
asking you what are two, or they may ask you what are the three. So
or
it should be 3. Let's put 3 there, because we have 3. Go ahead, what are the 3?
Section 12, failure to disclose.
What page we
Section
looking for?
62.
62.
62. And what are they?
Section 12, failure to disclose. Section 13, failure to disclose by the MLRO. Section 14, tipping off.
Okay, now we have here, I think this may have been, because we have what sections we have for the primary offenses, so that may be 3, because it's section 9, 10, and 11, eh? Right?
Mhm.
Yeah.
So I think we'll just check the act, but for now, we go in with the 3. Okay, number 5, blank mandates that financial institutions as defined in section 3 of the act verify the identity of their customers who wish to become facility holders. Existing facility holders whose identities are doubtful, existing facility holders, and those with occasional transaction, where we will find that answer.
page 63.
63, what it says?
The FTR states the mandatory documents required by financial institutions to verify the existence of facility holders.
Pursuant to the FTRA, it is mandatory that financial institution verify
The identity of their customers who wish to. Oh, dang it. Hold on, let me look at it again.
whose identities are doubtful. Now they throw you off with putting section 3 in here, right?
Yeah, I tried looking, but I didn't see that anywhere.
No, so all we have to do is just to now go to the act itself so we can pull it up. And then you will be able to confirm exactly where it is. So that's why they want you to look at your act and not only rely on what is here, because sometimes we have typographical errors.
Yes,
So we have to go here. And they say go to section
3.
3 of the act under poker. And I don't see that. Let's see, identify risk offenses, proof. Okay. And so they say, mandate said financial institution is defined in section 3. So they define in section 3 of the act. That's what that is. But I don't see them being defined. So sometimes you have, that's a typographical error because they're not defined in section 3. Oh, this may be in the FTRA. Yes?
Yes.
Transactions reporting at Bahamas. So let's look at section 3 here. Okay, so that's what it is. They have described the financial institutions in section 3, who they are, and they're required to verify the identity of, so they are what? We are now on page 60. So they put financial institutions. What page we will find that on?
You're still referring to number 5?
Yes.
Is that on 63?
63, what 63 says?
Pursuant to the FTRA, it is mandatory that financial institutions conduct a risk assessment to identify, assess, and understand its identified risks related to its clients and countries' jurisdictions of their origin, countries' jurisdiction of operations and product services, transactions, and delivery channels.
Okay. What about this thing where they ask about, and those with occasional, whose identity, is this in facility holders whose identities are doubtful? Where we have that?
I'm not saying that, Ms. Dorset.
So we have instances where all they're saying is all of these things fall under who? The financial institution. Remember, they have to do this as well, eh? They have to ensure that the person who comes to you, you know their identity and you are not, you may be suspicious about them, right?
Yes, sir.
So which act governs you? All this about? Because that is all covered under the legal requirements for customer due diligence. So this is, she's given the answer correctly, but I'm just saying all of these things fall under there. All of these things fall under the FTRA. That's all this is, okay?
Oh, wow. Okay.
So the FTRA mandates that financial institutions as defined in section 3. So section 3 of the FTRA defines financial institutions, okay?
Okay.
Yes,
And
ma'am.
that's what section 3 is all about. It's just defining what is a financial institution.
Okay.
That's why we didn't see it in the book. It's just because you're supposed to read this in tandem with the act. The section 3 of the FTRA defines a financial institution. So FTRA mandates that financial institutions is defined in section 3. So that's what all that introduction was about, to tell you the act itself defines section 3 in section 3 defines what is a financial institution. And these financial institutions supposed to verify the identity of their customers who wish to become facility holders. In existing facility holders whose identities are doubtful, they're supposed to verify, and existing facilities holders and those with occasional transaction, they're supposed to verify the identity of the customers, okay? So the question was all about not just this part of it. This is what the financial institutions do, but they wanted you to tell them what act defines who is a financial institution, what mandates the financial institution. And the financial institution is defined under section 3 of the FTRA. So that's what that was all about. You got that?
Sure.
Yes. Define KYC.
Know your client.
Okay, where we'll find the answer.
Gotta be on page 65.
65, and what 65 says?
It's an acronym for Know Your Client. It is information that is obtained and used by an organization to verify a client's identification, gather information about his business, and assess the potential risk that the organization might be taking on. And then they will make a decision as to whether or not they're going to accept it or continue with that client once accepted.
Excellent. What about CDD? Where we'd find the definition for CDD, and what is that?
Ms. Dorset,
Hi.
so is that sometimes referred to as know your customer?
Yes, you could say you know your customer as well.
Okay.
Okay, CDD. Where we find that?
Page 65
Okay, what is that?
Customer due
is the
diligence.
And what is that? What is customer due diligence?
customer due diligence is additional and or more detailed information that is obtained from a client by an organization in order to update the customer's information other than the original KYC information on acceptance.
It also does what?
Further assess the potential risks that the client possesses to the organization, monitor client activity, and mitigate and manage client risk.
Okay, so that it further assesses the potential risk that a client poses to the organization. What about define an STR? Where we'll find that?
Page 66.
Page 66. What is an STR?
It's a success transaction report.
Mm-hmm.
It's a written report which sets out and contains the grounds for which a financial institution holds a suspicion about a particular client and or transaction or series of transactions that may involve the proceeds of criminal conduct or an offense under a specific legislation which criminalizes money laundering.
Excellent. Okay. What is the penalty for failing to report an STR? We will find that answer.
That's also on 66.
Mm-hmm. And what is the penalty?
Imprisonment for a term not exceeding 12 years. Or
And what section deals with that?
section 15
Two of what?
of the proceeds of crime.
Excellent. What are the best practices for client due diligence for individuals and for trust? Where we'll find that answer. Hmm?
Is that page 67?
67 to 68, and so on, eh? That covers, so 67 goes all through the individual. And then we go on to requirements for the trust, eh?
Yes, ma'am.
So all of that covers that, eh?
Yes, ma'am.
So that's the best practices, yes?
Yes, ma'am.
Now, you know the legal requirements for client verification and due diligence? What are legal requirements? You know the act, what deals with it, eh? What act deals with this?
The FTRA.
FTRA.
Excellent. So FTRA deals with us verifying and due diligence. So we have it right on there, legal requirements on 63. We just went through that, remember? And defining it under section 3. The financial institution has certain things to do. They have to conduct risk assessment, identify, assess, understand risk related to the clients, get their information, source of funds, all of that stuff. That's the legal requirements for client verification and due diligence. What about developing an awareness of the money laundering and terrorist financing risks inherent in the vulnerabilities of products and services relating to companies? Where we'll find that information under what act?
POCO.
POCA. So POCA will tell us what we need to not do and what are the 3 major offenses?
Section 9, concealing.
Mhm.
Section 10, arrangements concerning proceeds of crime. And section 11, acquisition, use, and possession of the proceeds of crime.
Okay, now let me tell you, when I looked in proceeds of crime, I see they have a section 8, right? Which may be helpful when we were looking at why they didn't have that. They had 4. No conviction for offense shall be necessary to prove that the property is directly or indirectly the proceeds of crime, nor shall it be necessary to prove that a specific offense is being committed by any person. Knowledge, suspicion, intent, or purpose may be inferred from objective, factual circumstances. So they may have proof of money laundering is one. May be one of the 4 major offenses. They have proof of money laundering, concealing, arrangements, and acquisition.
So proof of money laundering would be section 8.
Yeah, look at section 8 in the POCA.
Okay.
Okay. That may be why we had 4. They may have may have left that out. And this says any offense described in the first schedule. So let's look at the first schedule of this. So it's good for you to just look over your acts and reading, because you see sometimes you may have typos and you could just correct anything that's a typo in this, okay? And then you have identified it. So it's good just to briefly scan your act, just to look at it to see how it relates back to what the book has, okay? Just briefly scan it. You don't have to go into great details, but it's good to see it at least. What is the best practice relating to client due diligence? What are the best practices? Where we'll find that? Or give me an example of best practices. We just went over it from 60, what?
67 to 68.
Okay, and what are they?
You just want one?
Yeah, just give me one.
Copies of a recent utility bill or credit
Uh-huh.
card statement in order to
And-
verify the client's current residence.
Okay, anybody else?
The full name, home, and business addresses, including telephone numbers, emails, and facsimile numbers, nationality, occupation, and date of birth of the ultimate beneficial owner of the companies, principals, professionals related to or concerned with the client.
Excellent. Anybody else? Okay, what about best practices to client acceptance and monitoring policies and procedures? What that is? When we have already accept, how we monitor them by doing what? Remember the internal legal and compliance audit? On the bottom of 69. What we do? I lose you.
Conduct to conduct the audit
You may
on
do
a
it,
quarterly or
Right.
semi-annually basis.
right. To ensure that clients meet your KYC requirements and any statutory requirements that may be in existence at the time, because you know laws change from time to time, so you have to ensure your clients' information is updated.
Yes,
What
ma'am.
about assessing and managing the client acceptance process for compliance with applicable laws? How would we do that? How are we gonna do that?
Just want to make sure that whatever identification that the client is providing, it's something that locally we could accept here and it's within best practice for the company that you work for.
Right. So what we're gonna do is, we're gonna look at the bottom of 65 and the top of 66. So you see all of that, ensuring the documents, all that is there. That deals with that, eh? Scrutinizing.
Mhm.
The primary objective is to ensure that the clients are of good reputation and character and their business activities are lawful within the ambit of the existing laws of the Commonwealth of the Bahamas, yes?
Yes, ma'am.
Okay, look like I losing y'all.
No.
Okay, any questions on unit 6? Is unit 6 clear or not so clear?
It's clear, but I still think I need to do some review on it, Ms. Sarka.
Yes.
Okay,
Yeah, I
Because
need
of
to
how you
see
were
it.
going back to the previous like regulations and stuff, I honestly felt a bit, I don't want to use the word loss, but I needed a refresher.
It's just a lot to take in at one time.
Yeah.
right,
Yeah.
so that's why you see me keep telling you all from the beginning, what we reading, we just gonna expand on. So I want you to be able to go back and put it back into what you read before. So whatever we did at the beginning, all we doing is opening it up.
So question, you see like how when you ask us to review questions, we just give you like the first generalized answer. And then you
Right.
come back and you're like, okay, well, give me your references, X, Y, and Z. So basically on the exam, we're going to be called upon to have our references in order. That's basically what you're saying.
No, not what you're doing is if you are able, see, that's how you grade it, eh? Based on your understanding. So if you just give me a one line and somebody expands on it, then your grade moves down, eh? So say for instance, all of you I said, what is, who's a director? And you just say a director is, you just give me the standard answer. You don't expand on it. Then everybody on the same level, right? But now if somebody said a director is not really defined in the act, however, under section 55 of the IBC Act, there's a standard duty of care and all of this stuff, and you go on, then you've moved yourself away from the parquet.
True.
Because you show that you not only understand, but you know how it relates, how it is defined and how it's perceived, all of that. You can show that you didn't just read the book, but you understood what you read. So if you just given me one-liners, then you really you've not grasped it because you can't put it in your own words. You're still giving me back what I gave you. So if you now can expand, so if I say, for instance, ABC company is seeking to incorporate, or no, John Doe is seeking to incorporate a company in the Bahamas. He is a Saudi Arabian prince. His source of funds is he is a part of the royal family, and he is using what is a big bank? In let's just use UBS because I don't think they exist in UBS in New York, to introduce him to a company in your company in the Bahamas. What information what triggers you right away? What all comes up in your learning from unit
First of
1 to
all,
6?
He is a
He's a
pap.
pap.
He is from
Okay.
Saudi Arabia.
Okay.
Red flag.
So and then his source of wealth is basically an inheritance.
So how we could verify that? You need to verify that, eh?
Yes, ma'am.
Okay. What else? What kind of company he needs? If you decide to use for
He
him,
needs an IBC.
he needs an IBC. And what is the purpose? You need to ask him, what is the purpose of him?
Yes, ma'am.
Setting up the company. And then what you want to make sure.
That you do the enhanced due diligence.
Right. Because now you got to make sure that these funds are his own, eh?
Yes,
That
ma'am.
he's going to bring here, and it's not the proceeds of
Terrorism.
So that's the proceeds of crime are coming. So now you know, so you showing the examiner, you know, about POCA, you know, about POCA, you know that under the FTRA as a FIU, you see when you could talk these, then you in the language, right?
Talking fancy.
Yeah. So now you are part of this whole organization. So under the FTRA as an FIU, we have certain requirements. You already talked about that enhanced due diligence. So they know now you know about him being a
Pap.
right.
Mhm.
So you see how you're learning now. You move yourself away from just a one-liner to show that you understood what you would have read from unit 1 to 6.
So it's just all about expanding with your answers.
Right,
To show
because you see,
understanding.
they gave you a summary, but then they expanded on each part that they summarized in the initial one. So now I say, now the Saudi Arabian prince has now set up the company. However, two of his brothers or his wife is now seeking to lift the corporate veil because she's saying that the funds that he has should have been assets that were attributed to the marriage. What you gonna say? What she's saying more or less, that the company is a what?
A facade.
Okay, so you're all on target. So you see, your learning is working out. So she's saying it's a facade. And so what test was established to say if it's a facade? Where was it established? In what case?
Solomon versus.
No,
No, sorry.
We have a facade test established on page 14.
Wilson versus Strathclyde Regional
Right.
Council.
Right. And the facade test says what?
It says that either the business is legitimate in what it is doing,
Right.
or it is carrying on illegitimate actions which the corporate veil needs to now be embarrassed.
Right. So there's and they now want you to do what? If they trying to establish it's a facade, they want you to do what? Pass,
The corporate veil.
but this will only be done in,
Special circumstances.
yes, where the company was.
Concealing facts.
However, if we can establish that this wasn't done for that purpose, then what happens? The company remains, eh?
Yes, sir.
And how do they determine that?
By taking it to court.
Right, but how, when would they do that? If it's what happens?
If it passes,
What's
it doesn't
the
pass the facade test.
circumstances in which the court will lift this corporate veil? We got 4, right on page 15.
The single economic unit company group,
Mm-hmm.
the evasion of limitations imposed on conduct by law,
Mm-hmm.
and evasion of right of relief, which third parties already possess.
So she will be saying what? As a wife, I had a right of relief, what I was already possessed when you tried to establish this company, right? Because I'm a third party to the company, but I was your wife, so the assets were both ours. But it's for her to prove that, eh?
That's true.
Yes, so that's where that's one of the circumstances where she would be approaching the court to lift the corporate veil.
So how she get that far though? I little lost.
So what you mean?
How the wife get that far?
To say she going to court?
Mm-hmm.
So you and I are married, and I realize now we're going to get a divorce. When you come to court, what you say? I have nothing. All my money is in trust. I only get money as a result of me being a part of this family when they give it to me. You can't touch that if it was established before we came into being, right? But now you had some wealth that you have during the marriage. I know you have money somewhere. And then I found one day when I was washing your clothes before we left, before we separated, I found one statement would say ABC Company Limited in the Bahamas. And then I bring that to court to say, I believe this company has been set up with the intent to defraud me of my rights as a person married to you to get some funds from you, right? You take all the money you would have had and put it in this company so that whenever divorce they come, I don't get $1. So now the courts will say, now you can't go on a fishing, you have to know some things, but you'll say, this company ABC Limited is owned by my husband.
And it was established during the marriage.
During the marriage. So I can see you left your certificate of incorporation. I may find your whole package, what the company sent to you, eh? I see shares were issued and all of that stuff, and I keep that so this was peacetime when I find that. So now we're in wartime. I use my weapons, eh?
Yeah.
So now I want the court to lift the veil, but I have to now prove certain things happened, eh? Or I may be a creditor. And I know that you would have disclosed you have shares, or I may find out later, did you have shares? I need to lift that in order for you to get my money, because what we said happened in the beginning, you borrowed money from me, like Mr. Solomon, and what you did with it. You say you putting it in this company, what you do with the money?
You put some in the company, and put some in another company, what I don't know about.
right? Or you take all the money and you leave the company bankrupt. And now when I go looking for my money, what happened? Anything there?
No, because the company done gone bankrupt.
Right, and so I need to pass this corporate veil to get to who?
To the beneficial owners.
Right, I need to get to you because you have the money in your own name, or you have it somewhere else, and you say, but you only have a relationship with that company, which you don't get from that company, you wouldn't be getting from me.
Mhm.
So now we trying to get under there to find out where the money, that there's no company, so we want to do what? Remove the what?
Corporate veil.
And so now would we move? What the company provides? Limited what?
Liability.
Yes, so we want to remove that limited liability and get to you. We just talked about this when we insuring what? What we just
When
talked
we
about.
insuring who the beneficial owners of the company are.
Right, but when we doing our corporate record keeping, we ensuring that limited liability protection is in place for limited liability companies.
Mhm.
So that's one
So
of the main things.
So question, what if the husband had established these companies, but instead of having himself as the beneficial owner,
Mhm.
he had placed it in his son's name, who is not the wife's son?
Mhm.
Right, so now we'll have to do some more digging, eh?
Mm.
So you'll only know that where it would have been established. However, what can we do? Because now he's a PEP,
Mhm.
right? So when he come with this money, you're supposed to be having some strict due diligence stuff in there, eh? Right?
Yeah.
So when he comes with this money, at the time when he's married and all this stuff, you as the FIU,
Mhm.
what you're supposed to be doing, ensuring that this money is from a source of wealth, and then you would ensure that you're not facilitating any what,
Money laundering.
right, or evasion of
Evasion
whatever
of tax
obligation.
or whatever.
Now you don't have nothing to do with his marriage. Now remember that ain't nothing to do with you.
No.
They have to prove that that's nothing to do with you. But I'm just saying, in the case of a creditor, you have to ensure that he's not taking funds or he's using funds otherwise. But whether the wife need to do all her work, we don't do her work for her, eh?
No.
Right, but we have to ensure that we keep our side as a FIU. We do what we were supposed to do. Anything on incorporation? What we need for incorporation? How do we begin?
That's for IBC or limited company.
Let's try the IBC.
Okay. So that's on page 36 again.
Mhm.
So after we reserve the name and we may have gotten an extension, then we have to do the FCSP form,
Mhm.
where we ask for the names, nationalities, and complete address, occupations of the directors and shareholders of the company. Is this form digital or does you have to write that down?
Now remember, this according to how you have your work set up in your place. So you
Okay.
may have, this FCSP form you would have sent to your client to complete, eh? And they have to return it to you.
Okay.
Because you need, this information is internal. You need this in order for you to do your job.
Okay.
But I mean, what are we preparing for incorporation? What we need?
the KYC and due diligence of the shareholders and directors.
Okay, but what we need for the registrar general?
We need the
Name
memorandum
and
of association.
address.
So we need what we need? What are the documents we're gonna need to provide to them?
The certificate of incorporation.
No, that's what they're giving us.
We need the name and address of the registered office.
Right, but that's gonna be included in a document. So what we need for the registrar to incorporate a company, we need to
The
have,
name.
we need to reserve the name.
Mm-hmm.
Then what else we need?
We need the Central Bank of Bahamas approval exchange control.
This an IBC,
Mhm.
dealing with offshore, a company, we dealing with some foreigners. This
We
is
need the objective of the company.
incorporation, we only incorporated with the registrar now.
Oh, okay.
Okay, so
The
we have to
we
reserve,
have
certificate of compliance.
we have to reserve the name.
Okay, we need that certificate of compliance. What else we need?
We need the money, the
The
incorporation.
incorporation fee.
Which is how much?
$400. If you have up to 50
Well-
grand or 1,200 for excess of 50.
Okay, and
If
what
you
else
need
we
that
need?
same day, we need the $450 on top of that plus our fees.
Right, what is the important documents we don't have yet?
Register of directors and officers.
No, we don't need that yet. We could put that in when we ready. And we have how much time to put that in?
Oh, see, I don't know. Say check page 28.
How much time we have? In accordance with section something of the something. What is the main document we need for you to get this company incorporated?
Oh, the shareholder documentation.
We incorporating, you're still too far.
The memo and arts.
Yes, you give me the certificate of compliance, but we don't have the memo and arts yet. We need the memo and arts to be uploaded, eh?
Yes.
Yes, ma'am.
Yes, so we need that. So we have the name reserved, we have the memo and arts, we have the compliance, and we've paid the fees. Then the registrar gives us what?
Certificate of
Certificate
incorporation.
of incorporation.
Okay, who's gonna sign our memo and arts?
The subscribers.
Awesome, and who's gonna, what else they need? Somebody to what? To witness their signature, right?
Yes.
What the certificate of compliance does? Who's gonna sign that?
The law firm,
Or,
the registered agent.
excellent. And in that memo and arts, what we gonna have in there, the object or purpose of the company, right?
Yes,
Mhm.
ma'am.
So this is incorporation, so let's make sure we know what we need for the registrar and what we need for us. For the registrar, we need those documents. For us, we need some more information, right?
Mm-hmm.
What are the constitutive documents for an IBC, so we can see what you know? We just said,
The constitutive documents, would that be the memorandum and articles of
Mhm.
association,
mm-hmm,
the name,
mm-hmm.
the certificate of compliance,
What is the name? What name you talking about?
the company name,
Look on the bottom of 35 to 36. The main constitutive documents of and instruments for IBCs.
oh, okay,
You see that?
yes, ma'am.
So this little review, you all need to just review. So before you all move on, know what certain things are, okay? Because that's
Yes, ma'am.
important to know. Who is an executive director?
A director that works at the company,
And who's the non-executive?
a director that just sits on the board of the company.
Excellent. What is a certificate of incorporation?
It's like a birth certificate. It's like,
Says when the company starts to exist.
And who gives us that? Who gives us that certificate?
the registrar general.
Awesome, awesome. The registrar general. Okay, any questions you all have?
Not at the moment. I just think I need to go over that the
So just do a
laws
little quick
regarding
review,
like
just
what
skim over what
So I
you
tell you
think you
my
know,
final
and then
from last
review
night.
in depth some of what you don't know and go from there. Okay?
Yes, ma'am.
I think y'all have Miss
Mhm.
Archer next. I'm not certain.
Oh Lord.
And I think I have, huh?
Nothing.
Then I have another 1 or 2 sessions with y'all afterward.
Oh, that's the
Um,
review.
I am not sure when I'm back.
Oh,
Let
that's
me-
then that's a part 2.
Yes, probably part 2.
Oh,
But I think y'all may have an exam after some more
Miss Archer.
units. Yes. Okay.
Yeah.
Okay, so you all do well. I think you all have a good grasp. You just have to read over and refresh. Yes?
Yes,
Yes.
ma'am.
It was helpful?
Yes, ma'am.
Excellent. So I will
Can I
see you
email?
all.
I thought you were very helpful.
Good. Okay, so
Can I email you if I get stuck?
of course.
Yes, ma'am.
Okay. And you all try to read some of the cases I sent
appreciate
as well.
Yeah, I have to read them.
Okay
Yes.
then. Because
And
it'll
I
help
have
you.
another question.
Uh-huh. Go ahead.
Discuss it. I mean, like I'm from what I understand, you work in the industry, right?
Right. I used to work in the industry. I practice law now more than anything.
Okay.
But I used to work in offshore banking for a while, but now I'm doing more law work than anything.
Okay. So
I-
from the point in which we're at, whereby being beginners, X, Y, and Z,
Mhm.
what would be your best tip if you had to go back from the break again? What would you suggest?
Okay, so this is good. You have a good starting point because this helps you. Now it's good if you're already working in it because now you get to understand what you're doing.
Mm-hmm.
If you're not working in it, then this is a good starting ground for you to know where to go when you get in there.
Mm-hmm.
But I mean, it's always a good area. I don't know that it's good for you to know. Sometimes you don't get to practice it as often, but it's good for you to be informed to know what you're doing because sometimes you go in blindly and you realize you've been doing things that you should not be doing because you don't know all of the laws surrounding. So it's good
Mm-hmm.
for you to know these things and practicing because you could put yourself out there to be liable for things that you were not aware of if you just go into the on the job experience.
Fair
So
enough.
it's always good to get this part of it so you know because you're working with people who actually know what's going on, but you're now a lay person and it may be that you have been exposed to things that you should have known because ignorance is no excuse. You should know what you're doing when you're working in certain areas.
Mm-hmm.
So that's good that you take time to know what you're going to do and you protect yourself because you see all these offenses that are out there. So they put you on the line whether you realize it or not.
Okay.
But it's a good area to get in. And once you know it, you only could move up.
Okay. Thank
Okay.
you.
Yeah, so you can just review, but I mean, I think you all have a good grasp and you seem to be able to understand what we went through.
Okay.
So it's just a matter of you all reading over, okay?
Yes, ma'am.
Okay, so I'll see you guys soon and do well on your midterm.
Yes, ma'am.
Okay, take care now. Have a good weekend.
You
Bye,
too.
you too.
Bye-bye.
Bye.